Hello, welcome to the weekly technical analysis review for Monday, November the 4th. I'm Rafi Payajan at XM.com, and for this week we're going to be looking at the pound dollar, the euro yen and the Kiwi dollar. So let's begin with the pound dollar pair. We can see there's still plenty of positive momentum in the short term for the pair, even though the MACD we can see has dipped below its red signal line, pointing to some easing of that upside momentum. So if we continue to see gains for pound dollar, the next major resistance should come from the 78.6% Fibonacci retracement of the down leg from 1.3381 to 1.1957. So that comes around at 1.3076, and breaking past that would open the way towards that peak from 2019 of 1.3381. If though we do see the current positive momentum losing steam, we like to see prices initially stalling at the 61.8% Fibonacci at 1.2837. Dropping below that, we've got a number of moving averages that could prevent the pound dollar pair from falling further. We've got the 20-day moving average at 1.28 and the 200-day one at just above the 1.27 level. And then after that we've got the 50% Fibonacci at 1.2669. So if the 50% Fibonacci fails to hold, that would open the way towards the key support of 1.25. That's the 38.2% Fibonacci, also where the 50-day moving average currently is standing, and that's also been an important congestion region in the past as well. If prices drop below the 1.25 level, we could see the current bullish structure being erased. Let's now turn to the euro yen pair. We are seeing some negative momentum in the very near term. Looking at the stochastics, they're pointing downwards. The RSI though appears to be flatlining in positive area, so we can't rule out further gains in the near term. We did see prices stalling at 121.40. Prices failed several times to break past that barrier in the past week or two. If the euro yen manages to do that, we're likely to see further resistance coming from the 122 handle. That's the 200-day moving average, and then above that another big test will be the 123 handle, which was a major resistance back in the summer of 2019. To the downside, if prices continue to retreat, we could see support coming at 120.38. That's the 20-day moving average before hitting the 120 handle, and then further down we do have the Kijun Senlight at 119.26, followed by the 50-day moving average at just below the 119 handle, and then failing, though if those supports fail as well, prices would then slip inside the Ichimoku cloud, and then the real test is the bottom of the cloud, which coincides with that long-term descending trend line. So at the moment that comes to around 118.20. So if euro yen was to break below that key barrier, we could see the focus shifting back to the downside, and we could see a resumption of that long-term downtrend. Let's now move on to our final pair for this week, the Kiwi dollar. We can see that we do have a modest uptrend in progress there. Prices currently stalling around the 38.2% Fibonacci retracement of the downleg from 0.6789 to 0.6203. Looking at the technical indicators, we are seeing possible dangers there in the near term. The percentage K line of the stochastic oscillator has just turned downwards, or hasn't crossed below its percentage D line. Looking at the MACD though, it is still rising and above its signal line. So all in all, it's still very positive, but traders should watch out for possible near-term small downside correction. Assuming though if that uptrend stays intact, the next target for the bull rules is the 50% Fibonacci at 0.6496, just below the 0.65 handle, and then further up we've got the 61.8% Fibonacci at 0.6561. So prices would need to break above the 61.8% Fibonacci as well as the 200-day moving average slightly above that in order to give us a convincing signal of a new sustainable uptrend. To the downside, if we do excuse me, if we do see a near-term correction, the prices could dip towards the 23.6% Fibonacci at 0.6341, which also corresponds with the 50-day moving average, but if that important support region fails to hold, we could see Kiwi dollar heading back towards that 4-year low of 0.6203 and then continuing its long-term downtrend. So that's it from me. Thank you much for watching and have a great day.